Absolutely quiet opening for the market. The Nifty is down about 20 odd points.
The market continues to be fairly range-bound, Pavitra.
Yeah.
There's nothing dramatically changing.
We have the Nifty, which is down around 120 odd points.
It's been a bit of an opposite kind of a day. Not very much in the morning, small cut, 20, 25, 30 points, and then a little bit more. So, well, we'll end with a 110-point cut.
Hello and welcome to Markets Today, the show which focuses on the top news from Dalal Street. I'm Ekta Batra and here are the top stories. Stock markets wobble across the world after the minutes of the US Fed Reserve meeting signal further rate hikes. The sensex is down nearly 400 points. The Nifty loses 100 points. Mid-caps buck the trend and the index ends in the green. Shares of Adani Power perk up after GQG makes $1 billion bet with the latest investment. GQG's exposure to the Adani Group is now about $4 billion. Bata gains over 5%. Bata India and Adidas are likely to join hands. Sources say both companies are in advanced stages of talks to seal a strategic partnership. That's a CNBC-TV18 exclusive. Electra Green Tech JBM Auto gain after the cabinet clears the launch of 10,000 electric buses under the PM e-bus service with an outlay of 57,600 crores. Shriram Finance gains after UBS initiates a buy rating. Lupin sinks despite a new launch in the US market. US 10-year bond yield moves closer to its highest level in 15 years as rate hike fears loom. Bond yields spike in India as well. The rupee weakens against the dollar, ending at a record closing low. Well, let's get to the first story then. Stock markets wobbled across the world after the minutes of the US Fed Reserve meeting signaled further rate hikes. A range-bound session on Dalal Street saw the Nifty and the sensex end with cuts. The sensex fell close to 400 points, while the Nifty fell 100 points to end below the 19,400 mark. Mid-caps and banks fared better than the blue chips. While the mid-cap index ended 0.25% in the green, the Nifty bank ended flat with a slight negative bias. Prashant Nair is here with the details.
Well, finally, the market corrected. It started lower and stayed down, right? For the last 2 days, we've been getting negative global cues. US markets have been down. The market here would give an initial reaction and then spend the rest of the day in repair and would finally end flattish, right? Today, it was not to be the case. We started lower and then actually sold off more. The Nifty ending a little over 0.5% lower by close. Bank Nifty also ending down just about 0.2% lower. Mid-caps and small caps specifically came off sharply in the last 30 minutes of trade, but still much better as compared to the large cap indices. Cuts coming through in names like ITC and Reliance, responsible for about 50% of the losses on the Nifty. Power Grid, LTI Mindtree and Divi's Laboratories were some of the others. More declines as compared to advances, market breadth that is. So losers in IRFC, JSW Energy, Indian Overseas Bank, Global Spirits, there were blocks here involved as well. Religare, Dreamfolks numbers have disappointed and the stock's been down for the last 3 or 4 days now. And there was Balaji Amines, which was lower as well. Gainers and defense was a theme, and shipbuilders there specifically within the defense theme, which has done very well for the third day in a row. Cochin Shipyard up 40% in the last 3 sessions. So top gainer. There was Bata, our story there reacting very well. DB Realty, Amber Enterprises, JM Financial, Latent View, J&K Bank, Shipping Corporation of India, paper names like J&K Paper, West Coast Paper, and a name like Tribhuvan Das Zaveri for the second day running, seeing a fair bit of interest. Stability eyed in the US market. I think that will determine the near term for us as well. For the last 2 days, the S&P has corrected the most it has since April. And if the US is at the cusp of perhaps a bigger pullback, we are likely to see some consolidation, sideways price action here as well. Back to you.
Okay, all right, Prashant. Well, in market opinion then, Prateek Gupta, Chief Executive Officer and Co-Head at Kotak Institutional Equities, said that he is positive on India from a longer-term perspective, but doesn't expect a big rally in the near term.
If you look at the Nifty, for example, we're now trading at 21 times FY24 P, about 18 times FY25 P, for earnings growth of barely about 15% on a price-to-book basis is about 3 times for about 15% ROE. If you look at India's premium versus other the MSCI EM index, We're now at a premium of about 60%. The longer term outlook is very, very attractive still. And we also remain quite positive from a long-term perspective. But the problem is, I think in the short term, we will most likely go through a consolidation phase. Equally, in the short term, next few months, we don't see a big rally either. So we think, unfortunately, we're going to be stuck in this boring zone, plus minus 4-5% for the rest of this year.
All right, on to the second headline now. Adani Power perked up after the US-based investment firm GQG Partners made a $1 billion bet. The firm's investment in the Adani Group has breached the $4 billion mark after buying 8% stake in Adani Power. Apart from this, the fund has also acquired significant stake in other Indian companies. Nimesh is joining in with a deep dive on all of GQG's investments in India so far.
Rajiv Jain's GQG is betting big on India and now increasing the exposure beyond the Adani Group stocks as well. While the GQG's investment in Adani Group is now crossed 25,000 crore rupees in the last few weeks, the fund has also picked up significant stakes in the likes of JSW Energy as well as Patanjali Foods. Yesterday, GQG committed a massive 9,000 crores by investing close to 8% in Adani Power. They bought the stake from Adani promoters. The global fund has also acquired nearly 1.5% stake in the last 1 week in JSW Energy, investing close to 760 crores. And last month, they acquired nearly 6% stake in Patanjali Foods by putting in close to 2150 crores. They bought this in offer for sale. Now, the big bets for GQG in India are still the Adani Group stocks. Since March 2023, post the Hindenburg saga, GQG has invested across all the Adani Group companies. In Adani Green, they invested close to 4,000 crores. In Adani Enterprises, they've invested close to 5,400 crores. In Adani Ports, another 5,300 crores. And in Adani Transmission, they've invested 1,900 crores. So let's look at GQG's profile. It's one of the marquee global funds managing over $100 billion. In the international equity, they manage close to 40 billion. In global equity, they manage close to 30 billion. And in emerging markets, they manage close to 30 billion as well. Now, India stands out as the country allocation with nearly 35% exposure in the emerging market basket. Apart from the big exposure in the Adani Group stocks, the fund has also have some marquee names in India, which includes the names like ITC as well as HDFC Bank. Now, as I said, the fund is getting bigger and bigger into India. So let's see what could be the next on the radar as far as Rajiv Jain and GQG is concerned.
Okay, all right, Nimesh, thanks very much for that. Well, on to the third headline today. Bata rallied over 5%. The company is likely to ink a strategic deal with Adidas India. Sources have told CNBC-TV18 that the anticipated partnership between the two brands is focused specifically on the Indian market. That's a CNBC-TV18 exclusive. Vivek Iyer joins in with more details on this.
Well, that's right. What we understand is that there's a very interesting development that's likely underway between two large retail footwear brands. Both Bata India as well as Adidas are in talks for a strategic partnership, and this is for the Indian market operations that both of them are currently present in. Remember, Adidas is a very large player, in fact amongst the top 3 as far as the sports and athleisure brand market within the retail footwear segment is concerned. Talks, as per our sources, are said to be in the final stages, and we understand that the deal contours are currently being worked upon and are in the final stages, and an announcement is expected quite soon. We reached out to the management of Bata India. We also reached out to the management of Adidas India. At this point of time, they haven't reverted to our queries. We also understand that the main reason for this particular deal would be the fact that Adidas is actually looking to latch on to Bata's very strong retail presence. Remember, Bata has almost 2,100 stores spread across 700 cities in India, and this is a very strong network that they enjoy. And for Bata, from Bata's point of view, remember, Bata did FY23 revenues of over 3,450 crores, while Adidas at the end of FY22 had close to 1,500 crores. So it's a significant bump up as far as Bata's revenues also is concerned if they do manage to get Adidas on board. But still, important to see what are the exact deal contours in terms of whether it's an exclusive partnership or this is just a strategic tie-up in terms of shoes being available on Bata stores. Interestingly, within this particular space itself, within the retail footwear space, some interesting deals have happened in the last couple of years. In FY23, Metro Brands acquired Cravatics Brands, which actually held the exclusive long-term license for global sportswear brand that is Fila, and the Indian sportswear brand Proline as well. So that was a recent deal that happened. And also remember, Aditya Birla Fashion and Retail in August 2022 acquired exclusive rights for selling the Reebok India brand in India. So a lot of deals have been happening in this particular space. Another interesting one is what we are given to understand from our sources.
Okay, all right, Vivek. Thanks very much for that. Time for a short break now, but we'll be back with all of the other top stories. Welcome back. Well, on to the fourth headline on markets today. E-bus manufacturing stocks are buzzing in trade. The cabinet has approved a 57,600 crore package to implement electric bus services in 100 cities. The central government will spend 20,000 crores and the states will spend the remaining amount. Sonia Shenoy joins in with the details.
Oh, this is all we've been talking about, right, for the last 48 hours, the kind of movement that we've seen in the EV bus manufacturers. And yes, last evening, the government came out with a release where they said that an outlay of 57,600 crores will be approved for this e-bus service. This will include 10,000 electric vehicle buses spanning across cities in India. And the e-bus manufacturers have all been up and about, whether it's JBM Auto, Tata Motors, Electra, Greentech, Eicher, or even Ashok Leyland. Now, we had a word with JBM Auto where they said that this scheme will benefit 3 lakh people, but it will take about 6 months for cities to develop their strategy. They're expecting the delivery of vehicles to happen only 15 months later, so not in FY24. Hence, they have retained their guidance of 6,000 crores of revenues in FY24. And margins in the range of 12 to 13%. They also spoke about how they don't need to put any more capex at work. They already have a production capacity of 20,000 electric buses, and they are well on track for order execution as well. They have an order book of 5,000 EV buses currently. But I just want to mention, these stocks have rallied quite a bit, so some caution is definitely required on board. JBM Auto, for example, in the last 6 months has rallied 164%. Electra Greentech is up 190% in the last 6 months. Tata Motors is up 40% as well. But having said that, brokerages continue to be quite bullish. Goldman Sachs says that these companies already have a robust order book, and on top of that, this PM e-bus Seva scheme will definitely augment their order book. They have a target price of 710 on Tata Motors, 230 rupees on Ashok Leyland, but there are no details on the implementation of this scheme, so some more clarity is required. Back to you.
So I think now majority of these cities would be developing their strategy for execution, and it should take about next 6 months for them to develop their strategy, and 6 months post that, so about a year to 15 months for the whole execution to happen and things to get going. Post that, the delivery of the vehicles would start happening.
Okay, well, moving on, Nava tumbled 5.5% after the company has temporarily suspended production at its Odisha plant. This is due to an accidental damage in the raw material handling system. Vivek is back with us with more details.
Well, absolutely, an unfortunate incident at Nava Limited. What's actually happened is that an accidental damage happened in the raw material handling system. So the company's raw material feeding as well as other supporting infrastructure has been impacted quite significantly. The company says that they do have an insurance cover in place for the material damage as well as for the business integration. But for the next 2 months, what the company says is that there will be disruption as far as business itself is concerned. So production of silico-manganese in Odisha works will be temporarily stopped. Along with that, the ferro-alloys plant also that produces close to 4,000 million tons of silico-manganese, that also will be stopped. And also the captive consumption power plant that is running, that produces close to 20 megawatts, will also be affected. So for the next 2 months, some significant disruption underway, but the company says that they do have an insurance policy in place. But clearly the stock is reacting quite negatively on the back of this particular accident.
Okay, all right, Vivek, thanks very much for that. Well, moving on, Shriram Finance gained 2% after UBS initiated coverage on the stock. The brokerage firm mentioned in its note that the company is the leader in commercial vehicle financing and two-wheeler segment. Abhishek Kothari is here with more.
Well, as you mentioned, UBS has initiated coverage on Shriram Finance with a buy recommendation and a target price of 2,185 per share. They say that Shriram Finance is the leader in organized high-yield used CV financing as well as two-wheeler segment. So they like Shriram's changed narrative right now with lower cyclicality, higher yielding product mix and better growth visibility, along with the fact that it has revamped post the merger business model. So they think that investors are worried about the ability to access accelerate the CV portfolio. However, growth may be stronger on the non-CV portfolio side as well. That is the MSME, two-wheeler, gold and personal loans as well. So they expect AUM CAGR of about 16.9% between FY23 to 25, led by the fact that 16% CAGR will be seen in the disbursers, and amongst the product mix, 12% CAGR is seen in vehicle financing, while 25% CAGR is seen in the non-vehicle portfolio between FY24 to 25. Market underappreciates Shriram Finance medium-term EPS growth potential, which is about 15.4% CAGR over FY23 to FY30 versus the 12.5% implied growth at current valuations. Back to you.
Okay, all right, Abhishek, thanks very much for that. Well, moving on, we had Lupin, which was in focus as well. It slipped nearly 2% after it launched Spiriva generic inhaler in the US markets. Remember that it is a very closely watched launch for Lupin, but the street had probably factored it in, considering that they had received approval a couple of weeks ago. Now, in terms of the launch, it is going to be significant because it's a $1 billion size in terms of market for this particular drug. And there is expected to be no visible competition, at least for the next 2 to 3 years for Lupin. So they can probably make up to around $40 million from this drug in this fiscal, but ramp it up to around $100 million eventually, or $130 million in FY25, and up to even $150 to $200 million according to some estimates in FY26. So it is expected to be a considerable opportunity for Lupin. It probably just, saw some amount of profit booking on the fact that it's already rallied very significantly, around 40% in just the past couple of months post the anticipation of the news, and hence the street is, probably sold the stock on news. So that stock ended lower by around 1.8% today. But on to the fifth headline, bond yields are spiking across the world as fears over the further rate hikes loom. The US 10-year yield is close to its highest level since the 2008 financial crisis. In India, bond yields remain above 7.2%. The rupee weakened against the dollar to breach the 83 mark and ending at a record low. Lata Venkatesh is here with more.
Well, absolutely. The rupee closed at an all-time low, as you said, and this was despite the public sector banks selling a lot of dollars, possibly on behalf of the Reserve Bank. Actually, on Independence Day on August 15th, when Indian markets were not trading, in fact, 15th and 16th in the offshore markets, the rupee had gone as weak as 83.50. And there was some intervention by the Reserve Bank there as well. Today, it was relatively better behaved. This is entirely because of the way in which the dollar has been strengthening, as you point out. The dollar reaching to 103.5, 103.6. Just about a month ago, it was below 100 at 99. And this turnaround is largely because while the US data is coming out stronger and stronger, the comparable, a currency is always a comparison between another country. ECB is likely to have stopped its rate hikes because of the problems in Germany and even to some extent in other countries. Japan, again, export weakness, unlikely that the BOJ will do anything in terms of the yield curve control. China, weakness. So weakness again in other countries is making the dollar look strong because the US data is strong, and that's working towards the rupee weakness as well. In the yield market, it's an entirely different set of factors. There is a domestic problem in terms of the July inflation number, which came at 7.44. And now the bond market in India expects that the incremental CRR, high cash reserve ratio hike, could become a slightly more permanent feature or could be spread to all deposits. Or it's possible that the MPC may even contemplate, at least debate, a rate hike. So clear tightening from the Reserve Bank is expected. That's what you could see. And the other factor, of course, was the US yields now at some multi-year highs. There's a sudden fear after the Fitch downgrade and other such related events, downgrading of banks as well, a fear that the US fiscal deficit is simply too high and it's likely to remain high for a goodish bit. US debt is likely to remain high for a goodish bit, and that's why you're seeing the steepening of the curve and US longer-term yields rising, and that's having a concomitant impact on other countries' yields as well, including India. In fact, if you didn't look at just the 10-year, you looked at the swap market, then there has been a 20 basis point rise in yields.
Okay. All right, Lata. Thanks very much for that. Sticking with the macros from the currency market to commodities, global metal stocks are under pressure on the back of the Fed minutes, signaling more rate hikes on the table. Gold trades at 5-month lows. Manisha Gupta is here with a wrap.
Well, it has been yet another day when we have seen a decline continuing in case of the metal prices. This also is going to be a third straight week for that, where we are looking at further pressure continuing. Well, the latest trigger comes in from the US Fed official meeting minutes, which suggests that the inflation is sticky and further rate hikes not ruled out. In any case, we also are looking at weak China trade data, retail sales, home numbers, manufacturing data. All of that for the month of July has been on the weaker side. The strength in US dollar index trading at a 2-month highs has been yet another reason, but even more prominent has been the fact now that you have seen inventories rising for many of these metals, telling you that it's not just the macros or the sentiment impact, but on ground as well, the demand really seems to be suffering. So when you look at the copper prices, while we are trading at a 7-week close on to this one, the LME inventories have gained up by 52% in last 1 month. So from a low of around 37,000 tons, we are trading at 90,000 tons right now. So higher inventories, lower demand is weighing on. Zinc prices are trading at a 2.5-month lows as well. For zinc, LME inventories have gained up by 54% in last 2 trading sessions, and the inventories now stand at a 17-month highs. That's weighing on markets. Aluminum futures also are trading at around 5-week lows. Here as well, the China production has gained up by 2% for the month of July and almost 3% higher for the year as well. So those supplies seem to be increasing. Steel is trading at a 2-month lows as well. The rebar steel inventories have gained up by 36% in this year alone. So everywhere that you look, the supplies are increasing, inventory is building up and demand really not picking up. Nickel as well is approaching near 1-year lows. Here as well, we've seen supplies increase from China, Indonesia. So this is a problem with the markets believing that some more pain perhaps is still remaining in metals as a sector.
Okay, all right, Manisha, thanks very much for that. On that note, it's a wrap on markets today. The news continues right here on CNBC-TV18.